Something significant may be developing quietly behind the scenes. Across several countries, exchange centers are making swift operational changes, upgrading systems and training staff moves that point toward what could be the most consequential development in the Iraqi dinar landscape in over a decade. October 2025 may soon be remembered as a turning point for currency watchers worldwide. The signs are increasingly visible, yet few are connecting them. Exchange offices that once followed routine procedures are now working extended hours, installing advanced systems, and introducing new authentication protocols, all centered on one specific currency, the Iraqi dinar. After years of speculation, this time the indicators are tangible. So what's really happening? Why now? And what might it mean for dinar holders and global observers? Today, we examine the facts, updates, and subtle moves that could be leading toward a major October development. In recent weeks, multiple exchange centers across the United States, Canada, and parts of Europe have begun intensive employee training programs. These sessions go far beyond standard currency refreshers. Reports describe multi-day hands-on courses emphasizing Middle Eastern currencies with special focus on the Iraqi dinar. Staff are learning to operate new authentication systems that can instantly verify dinar notes and manage higher transaction volumes. This level of investment suggests intent. When an entire industry redirects its focus toward a single currency, it often signals preparation for a structural shift, whether in value, policy, or market activity. The timing adds further intrigue. Why October? Historically, Iraq introduces key budgetary and monetary adjustments in this month, often influencing international markets. And in 2025, the scale of changes appears greater than usual. Large exchange centers are not only training employees, they're overhauling infrastructure. Financial institutions have installed upgraded computer systems featuring enhanced security modules specifically for dinar processing. These systems are capable of real-time rate verification, faster transactions, and direct network integration with global banking systems. Many include anti-fraud mechanisms to automatically flag irregular activity. Such upgrades require months of preparation and substantial financial investment. The logical question is why now? Businesses don't modernize at this level without clear expectations of higher demand or operational necessity. The simultaneous timing of these updates in states like Texas, Florida, California, and Arizona points toward coordinated action, possibly stemming from higher-level direction or corporate strategy. This is not coincidence. Something appears to be driving a synchronized push toward readiness, and many industry observers believe the Iraqi dinar is the reason. At the operational level, the trend is consistent. In multiple U.S. cities, exchange centers are expanding capacity. In Phoenix, new hires are being trained specifically on Middle Eastern currencies. In Miami, advanced verification systems have been introduced to handle larger denominations. In Canada, certain centers have upgraded protocols to include detailed authentication procedures for dinar transactions. These moves might sound technical, but they signal readiness for higher activity. Businesses don't invest heavily in new equipment or staffing without a compelling reason. Many centers have even renewed armored transport contracts, indicating expectations of increased cash flow. These are not speculative claims, they're verifiable operational shifts that indicate something significant may be approaching. The coordination between centers makes this particularly noteworthy. Normally, currency exchanges operate independently, responding to local market trends. But today, we're seeing similar training, software upgrades, and infrastructure investments across several regions at once. Such alignment rarely occurs by chance. It suggests that shared directives or, at least, shared expectations are influencing multiple organizations simultaneously. Some analysts believe exchange networks have received internal guidance to prepare for higher transaction volumes. Others view this as part of a global modernization effort linking traditional and digital financial systems. Either way, the Iraqi dinar appears central to this sudden wave of activity. When businesses across an industry upgrade systems and staffing in unison, it's usually a sign of anticipation preparation for a change they believe is imminent. October has long been pivotal for Iraq's economic decisions. Many of its budgets, fiscal reforms, and monetary announcements historically occur in this month. This year is no exception, but the scope feels broader. Infrastructure updates, banking coordination, and regional alignment suggest that something larger may be forming. Iraq's economy also stands on firmer ground than in years past. Oil exports remain stable, inflation is under control, and foreign partnerships are expanding. These favorable conditions create the foundation for potential monetary developments, possibly even changes to how the dinar is valued or traded globally. The extent of preparation among exchange centers this year exceeds what's been seen in recent memory, underscoring that these moves are deliberate, not routine. The upgraded systems now being introduced in exchange centers are far more advanced than previous generations. They enable rapid processing, instant node authentication, and real-time connectivity with international rate databases. What once required days could soon take hours. Some systems can handle hundreds of simultaneous transactions without delay. Such technological investments are costly, often hundreds of thousands of dollars for larger operations, yet many centers have adopted them at once. That alone points to strong confidence that the upgrades will be necessary. Currency exchange businesses operate on profitability, not speculation. The concentration of investment toward dinar-related infrastructure implies that managers foresee a marked increase in dinar activity ahead. One clear sign is the new processing capacity. Some centers report the ability to handle exponentially more transactions than before. That scale of expansion doesn't occur without specific motivation. The question becomes, what's driving it? Possibilities range from a revaluation or adjustment in trading rates to regulatory updates that could expand global accessibility of the dinar. Whatever the cause, the breadth of preparation is hard to dismiss. Even smaller centers are following suit, adding verification machines and strengthening security systems, all aligned toward dinar readiness. The financial sector doesn't react to rumors. It reacts to data, planning, and expectation. The message is consistent: institutions are positioning themselves for increased IQD activity. These developments aren't confined to North America. Similar reports have emerged from parts of Europe and the Middle East. This international consistency indicates coordination on a broader scale. When operational updates linked to a single currency occur across multiple continents, it signals anticipation of systemic change, perhaps related to exchange policies, rate adjustments, or modernization efforts within Iraq's financial framework. Global banking networks are also upgrading digital infrastructure for transparency and real-time tracking. While public statements remain limited, the ongoing activity is visible. It points to the possibility of an approaching financial transition with Iraq's currency as a focal point. Another overlooked aspect is compliance. The new systems include improved reporting and record-keeping capabilities to meet stricter regulatory standards. 8. This ensures all transactions, especially large ones, adhere to anti-fraud and tax guidelines. Exchange centers are now encouraging clients to maintain complete documentation of their holdings and purchase history. As transaction volumes grow, regulators are expected to increase oversight. For IQD holders, proper records and proof of authenticity will become increasingly important. This shift reflects an industry moving toward transparency and readiness for higher, more regulated activity. Underlying much of this anticipation is Iraq's strengthening economic profile. The country's oil sector remains robust, foreign investment is climbing, and domestic development continues to expand. The Central Bank of Iraq has emphasized ongoing reforms aimed at stabilizing the dinar and improving its international reputation. These developments foster confidence both among investors and the financial institutions that facilitate currency exchange. If Iraq continues to modernize its systems and partnerships, exchange centers worldwide want to be positioned to respond quickly to any changes that follow. It's crucial to understand that these centers operate on pragmatic business logic, not speculation. Infrastructure investments of this scale reflect collective expectation, not rumor. Even without official confirmation, their behavior reveals preparation for heightened demand. When combined with the timing, technological rollouts, and staff expansions, the pattern becomes evident. Confidence is growing that significant dinar-related activity lies ahead. Whether that's a rate adjustment, new policy, or another monetary shift remains to be seen. But financial actions on this scale rarely occur without cause. The evidence of preparation from new hires to integrated systems shows a sector gearing up for change. Why October specifically? Historically, this month aligns with Iraq's fiscal and policy cycles when many budgetary reforms take effect. In 2025, those cycles coincide with one of Iraq's strongest economic positions in years,